So this is another video in the CANSLIM series where we are trying to cover all the letters on how the strategy is being used by super traders to make those mammoth amount of returns in the US investing championship. So on my channel, we've already covered C, A, N, S, and in this video, we're going to be covering the L, which is leaders or laggards. So here's the hard truth. Most people buy stocks that make them feel comfortable. Big brands, familiar names, cheap prices. But in a strong bull market, comfort kills performance. The biggest winner almost never feels comfortable to buy. They are the leaders, the top 1 or 2 or 3 stocks in the group, not the laggards or the sympathy plays. So in this video, let's break down how to spot real leaders, how pros filter them, and also the traps to avoid. So buy among the top 1 or 3 in a group. Every great industry wave, whether it was tech, retail, or biotech, had just a few real winners. The top 1 or 3 companies in a sector are usually the ones that multiply 5x, 10x or more. The rest, they barely move. Now, by number 1, I don't mean the biggest brand or the most famous company. I mean the one with the best quarterly and annual earnings growth, the highest return on equity, the widest profit margins, the strongest sales growth, and the most dynamic price action on the chart. That's the true number 1. And most of the time, it also has a unique, superior product or service that's gaining market share from older, slower competitors. That is what leadership looks like. Another thing which I talked about earlier is avoid sympathy plays. Here's a timeless quote from steel pioneer Andrew Carnegie. The first man gets the oyster, the second man gets the shell. That's exactly how stock market works. Every new business cycle is driven by new innovators and entrepreneurs, not the copycats. When you buy the cheaper sympathy stocks in the same group, hoping it'll follow the leaders, you're basically chasing the shell. So always buy the leader and avoid sympathy plays. So how do you separate leaders from laggards? Well, the simplest thing is to use relative strength, the RS. The RS measures how a stock performed compared to the rest of the market over the past 52 weeks. From 1950 to 2008, the average RS rating of the biggest market winners before their major run-ups was above 87. So the best stocks were already outperforming nearly 9 out of 10 others before they exploded. So the rule of thumb out here is buy stocks with RS rating in the 80s and 90s, not the 40s or 50s or 60s. I usually prefer above 100. And if your stock's RS line is falling for 7 months or more than that, or has dropped sharply for 4 straight months, that's a red flag. Even if it goes up later, it'll likely move less than the real leaders. Pick those 80s and 90s that are in the proper chart basis. See, high RS alone isn't actually enough. The stock needs to be in a sound base pattern before it breaks out. A base, we've spoken about this hundreds of times on my channel, is just a period of consolidation, the stock's resting phase before its next move. And buying from a proper base matters because it gives you a defined entry point with lower risk. Buy at the pivot point, the moment the stock breaks out with strong volume, and avoid buying more than 5 to 10% above the breakout. Buy the breakout, not the runaway. We've discussed this earlier as well. And remember, ignoring proper setups is like a surgeon skipping sterilization. You might get lucky once or twice, but long term, ignorance kills portfolios. Find strength when the market looks weak. So from the book, here's one of my favorite tells. Watch for abnormal strength on a weak market day. When everything is red and 1 or 2 stocks are still holding steady or rising, those are the leaders quietly being accumulated. That kind of strength usually shows up before a major up move. Throughout history, the next big winners have always stood out by showing power when the rest of the market was down. So when the market's weak, look for the exceptions. They often become the next big breakouts. Another thing is don't buy on the way down. Even seasoned investors fall for this. A stock falls hard, looks cheap, and they think it's a bargain. But the thing is, cheap stocks get cheaper. When you see high volume selling, that's not value. That's big money exiting. Stop buying falling stocks hoping for a rebound. Instead, cut your losses early. If a stock is down by 8% below your buying price, sell it. Take the small hit, stay liquid, and wait for the strength to come back. See, it's simple. Cut your losers, keep your winners. And this one is psychological. Most investors do opposite of what works. They sell winners early and hold the losers forever. Train yourself to do the reverse. Sell the worst performers first and keep your best ones running. Winners actually deserve more of your capital, not the losers. Next up is watch for over-owned stocks. A stock can actually be too popular. If every major fund already owns it, there's no one left to buy. And if bad news news hits, they all sell at once. That's how overowned stocks tend to fall harder in corrections. So look for stocks that still have room for new institutional buyers. So here's a quick checklist for spotting leaders. Buy top 1 to 3 leaders in a strong group. RS rating 80 plus, ideally 90 or higher. Make sure it's breaking out of a sound base on volume. Avoid sympathy plays and cheap laggards. Never buy on the way down. Cut losers early around 8%. Watch for abnormal strength when the market is weak, and be cautious of overowned stocks with no new buyers left. So the bottom line is, if you want to catch the big winners, stop chasing comfort. Buy the true leaders, the stock with superior earnings, strong RS, chart patterns, and visible demand. Ignore cheap lookalikes, cut your losers early, and when you see a stock showing true strength in a weak market, that's your early clue to leadership. Doing this consistently and you'll stop being an average hunter. You'd start spotting the same kind of leaders that drive every major bull market. So I hope you guys like this. Again, if I've added some value, please hit the like button. And if you're new out here, please do subscribe. I have more cool breakdown of stock market concepts and from books which are going to be launched on this channel. And as I've said before, in the CANSLIM, we have covered the CANS. This one is going to be L. The next one is going to be I. I'm going to do this for my thumbnail. And yeah, see you in the next one.